Good afternoon, traders. This is TonyD from easyMarkets in Sydney dealing room. We're just going at the end of the end of the Asian session into the European session. We've seen a pretty quiet day here. Some of the yesterday's ranges are still in play. We haven't seen the market being able to break out one way or the other. A little indecision, no data at all. So really, what the market's waiting for here is this Powell speech, testimony before Congress. The first time we see the new Fed chief in action, we'll see get a read on his hawkishness or his dovishness. See how he guides the questions about inflation. That's the most important thing, and just his intention to raise rates or not, and any views on asset prices have always moved the market in the past. So he's speaking tonight at the start of the US session. Like I said, he's a very important part of the puzzle as to which way we are going to go today. And the US dollar, which has been surprisingly upbeat in the last couple of days, especially considering that it pushed back against the sell-off yesterday. So the Aussie dollar is looking very strong this time, going into the start of the European session yesterday, and then reversed again. Same with the pound, very strong, above 140, and then a sharp reversal. Looking at daily there, so just to get a better picture, sharp reversal. Really caught the market at a surprise there. And dollar index really starting to show its stubbornness in going down at the moment, and it only has to get past this 90 level, and we've got ourselves a situation where the US dollar will look strong across the board. So it can happen. At the same time, stocks are really strong, and stocks tend to be supportive of the US dollar getting weaker. So it is weird that the US dollar reacted so strongly yesterday. Like I said, no real reason for that. So it's one of those markets where when things are misbehaving a little bit in terms of why is the market going up or down, that's where you start to get a little cautious, and you start to trade a little bit half size while the market's in a little bit of flux and waiting for the big direction to be chosen. Yeah, so you can't have the euro keeping on coiling up like it is right now without it about to make a bigger move. And look, there is Italian elections coming up. There is the Merkel final decision on if she's going to be president or not as well coming up this weekend. So there is reasons for the pound to go either way. So the indecision is building up as well. So this coiling up, this market getting tighter and tighter ranges usually is what precedes a larger move. And same with the pound. The pound is struggling to break away from the 140, either up or down. And the more we have this coiling around this level, the more likely that we are going to get a big move one way or the other. And it could go either way depending on how these Brexit negotiations go. Yeah, so there's a few things happening which are in the background here that do impact your miners as well. So if you're trading the Aussie, I mean, it's hard for the Aussie to rally in an environment where the US dollar is gaining against the pound and the euro. So you saw the Aussie come back down in sympathy as well. And this is going to be the case even though with iron ore so strong, multi-year highs right now, you don't see any way in which the Aussie will sort of break out and do its own thing. You might see it hold up better. You might see the Euro Aussie start to fall if the Euro starts to fall and the Aussie only falls slowly. But broadly speaking, the biggest game in town is if the US dollar is strong or weak, and that's the main thing that guides your trading decisions on a day-to-day basis. Alright guys, if you have any questions about what's going on in the market, please give us a call. You can get the contact details below. If you're not a member of the easyMarkets dealing room and you do want to have a dealer discuss why the market's moving one way or the other, give us a call on the contact deals below, and or you can sign up with the link below.